You're listening to the Pursuing Alpha podcast, hosted by Charles Brandon Snyder.
Jordan Wheeler, hey man, I appreciate you joining us for Pursuing Alpha. I can't be more excited, So I get to see you every day, all the time. I wear you out all the time, so it's like a normal conversation for us today. But since you're our trade analyst and financial analyst here in the firm, so I wanted to definitely have a conversation with you on this, and especially this week too. You couldn't be a better week, being that we're being taken over by China AI, that we need to have this conversation for a lot of people. So I'm excited to have you on. So take 5 minutes, 2 minutes, and tell us a little bit about your story, who you are, and what you do here in the firm at Alpha Capital.
Yeah, so I'm glad to be here. I kind of took an interest in finance when I hit the age of 16, and it's kind of been my passion ever since. So I've just learned a lot, just doing my own research, reading books, Benjamin Graham's
Valued investor
book. Yeah, I'm a value investor, so that's definitely my view on things. And
where'd you go to school at?
So I went to college at Taylor University in Indiana, and went there for 4 years, studied finance, got some experience on a Bloomberg terminal there, which was great. I was on the endowment teams helping manage money for the university.
And you're Bloomberg certified, apparently.
Yeah, it sounds good. It was a fairly short course. It covered the basics, but that tool is very complicated, and there's a lot that can be done on it. So explain
what the Bloomberg. We're geeking over this a little bit because we had a huge meeting with Bloomberg today, and incorporating the terminals here in our office at Alpha Capital. And so, explain what a Bloomberg terminal is in the most simplest terms possible, so people understand how complex this is, and also why it's a standard of the financial industry, and that most financial firms never even have these things.
Yes. So it's a primary news source. A lot of news gets reported through Bloomberg first, so it's great to have access to that terminal. Now, like we were going over today, now they have language learning models that are available to anybody who has the terminal, which makes research a lot faster because it just kind of pulls everything together. You can manipulate data in just about any way you can imagine, whether it be financial statements or other pieces of data.
And when you say manipulate data, you don't actually mean manipulate the findings. You're talking about interpret the data.
Interpret the data, yeah. Calculate ratios and kind of, search for the information and kind of view it from different angles, I guess.
And so, and why that's important to a lot of people that watch this is, like, we're on this 3-month discovery phase of the firm to actually incorporate derivative trading into the firm. And so this was a big piece today to have that derivatives trading, simplifies it for us to be able to be executing at a faster pace and more relevant to the information that they get from New York or they get from any news pipeline instantly, automatically, which I think is the coolest thing. Like, I'm geeking out over it, and we've, for the last couple hours. So it's a huge standard in the industry to a lot of degrees. But so you got your undergrad at
Taylor University.
And then you're also been working a couple of years on another degree. I declare it a degree, but it's a designation, right?
The word to use is designation.
Yeah.
And I don't want to get in trouble. So,
so your designation that you're pursuing right now is what?
So I'm pursuing the CFA designation. So that stands for Chartered Financial Analyst. There's 3 tests to get through. I've passed the first one. I'm currently studying for the second test. And it just covers a lot of different topics that are important to finance, like financial statement analysis for one, and statistics, economics, so different economic theories. There's obviously ethics and professional standards. That's important. And then it covers derivatives and different aspects of valuing equity and fixed income, securities, alternative investments. And there's 10 different sections, and I can never remember all of them. But those are kind of the bigger ones.
So I always explain this to a lot of people. So we have Dr. Starr, which has been on the podcast with us. We had Marco, that was a CFA level 2, level 3 now. I still have a great relationship with Marco and that side of it. But the big understanding that I always communicate to clients is that you need one is Dr. Starr is our economist, but you have somebody that understands and interprets the economy side of it, and then you have somebody that's a financial analyst, and you put those two people together, and they come out with a better outcome typically to help communicate. I'm not talking about performance and strategies and all that. I'm just saying being able to understand and communicate to people that will spend their entire life learning the financial markets this is what I think is a foundation or staple within when you evaluate how firms operate. And if you don't have those abilities, then I always question the why are you at a financial firm that just understands basic economics and they're just there to build a relationship with you. And that's an incredibly important standard that you have. You have to have a great relationship. But do they have the expertise to understand where you are as a client and then where the markets are, and make sure you marry those together to make sure clients don't take too much risk or too little risk and they meet expectations? That is so hard to do. And that's why the industry exists, I believe, because if everybody understood it, and that's why I always kind of push back on people saying that AI is going to take over everything and there's not going to be any more white collar jobs over there. I think it's just going to evolve, kind of like people didn't have a calculator and now they do have a calculator. It didn't replace all the accountants in the world, right? This is going to be that next tool to be able to communicate to people that are novice, that don't want to spend the time to educate themselves on the complexity of the financial markets, and allows them to actually interpret and communicate that. So having the expertise in there on a day-to-day basis to question where risk is, and if their appetite for that risk is relevant to where their season of life and their standard is as their own investment strategy. And this is why I think it's extremely important to have qualified people. And this is why I can't do that as the principal of the firm. I wish, hindsight 2020, I go back to college and I got a finance, I went into finance there at Lubbock Christian University, and I came out and figured, oh man, I always wanted to sit on your side of the table. And I figured out that, okay, I can do that. And then I got married and I had kids, and I saw the stacks of textbooks that you have to learn to get your CFA designation. And it just wasn't in the cards for me to do that. So the second best thing I figured out is to hire people smarter than me to challenge my cognitive bias that I have about where the market is. Would you say that's a day-to-day assessments that I do to you?
Yeah, I mean, you do have to learn a lot. And I mean, finance, no matter what role you play, I'm quoting somebody else and I'm blanking on their name, but it's not a lifestyle business. It requires a lot of work, and the market's always alive. So you got to stay on top of things and always be looking for information that's going to give you an edge over the competition, because everybody's trying to acquire assets and we've got to be the best. So got to stay on top of things.
It is. And the funny part to add on to this is I tell people that, look, my job is no different. Our job as a firm is no different than what yours is or your wife's is when you go shopping. And they look at me a little weird, like, what the hell are you talking about right now? I was like, does your wife go to Dillard's and go buy a nice dress, or do you go, to Men's Warehouse and go buy a suit? Yeah, right. Yeah. Would you like to buy that suit at 120% of its current value, or would you like to buy that suit that's an amazing suit that's still the same value at 80 cents on the dollar? That's the difference. That's all it boils down to. Finance tries, it's like everybody has legalese in the legal world that make themselves look smarter than what they are, and they just understand legal terms. Dr. Z's have doctor terms that they use, and we have the financial leads, right? And so they try to make things so opaque and so complex that it's hard. At the end of the day, all you're doing is trying to understand if a security, no matter what it is valued less than what its fair market value is. Wouldn't you say that's a fair argument of what we do? And if you buy those assets, eventually, we can't determine the time frame, those assets will be priced at a fair market value sometime in the future.
Yes. I mean, yeah, really. I mean, there's other ways to do things, but really the sound way is to always try and find assets that are undervalued, their cash flows are undervalued, and that's when you buy them, and you wait till they either reach their fair value,
market, yeah.
or a lot of times they will even run up higher than that, and then okay, it's probably time to start looking for areas to reallocate, because when some things become expensive, other things are becoming cheap. There's only so much money to go around, so you always got to be looking for those opportunities.
Yeah, the cyclical rebalancing inside of when things become overvalued right now. So it takes me talking about overvalue, and I can go into that narrative because this is really a narrative of a theoretical premise, and what I look at it for is like you're a value investor, I would say, to the T. Like you, and that's great, right? So you brought it up, and the technical term for value investing is looking at their operating cash flow, which is how much they operate in actual, and then their free cash flow, and then putting that onto what fair market value with that free cash flow would be sometime in the future. So if something has a whole lot of free cash flow and it has high growth to it, you might pay 10, 20, 30 times its free cash flow. Wouldn't that be a fair assessment?
To pay that much over its free cash flow, I mean, you definitely want a lot of growth.
Yeah, you have to have the growth. But my point is there's a metrics there, right?
Yeah.
That you evaluate other companies and comparable companies inside of that, whether it's sector analysis or whatever it is. But that's the game, right? Mm-hmm. And now the question is what happens when things become unreasonable in their valuations? How do people understand that? Because they always understand, like, hey, I'm going for something that's undervalued or fair valued, and I think it's going to have this catalyst to actually make it worth a whole lot more than what it is today. And that's what they buy on today, because the information and the flow of information is not like the 1960s and 70s. And when you look at Ben Graham and all that other stuff where you had to do copious amount of reading and research, now all this stuff is being reformed into artificial intelligence, where that research and that barrier to entry to understand that research is getting really narrow, right? But you still have to have the due diligence and the understanding of the value of how you as an investor values those assets, right?
Yeah. I mean, things can be overpriced for a very long time, and we've definitely seen that in recent years and in some areas of the market. And knowing when to get in or out of those momentum trades is, I mean, that's pretty tough. And then, of course, you have to know who you're investing for. Like with my own personal portfolio, I'm willing to be more risky because it's my own money. But then when you're dealing with clients, you have to know what that client's risk tolerance is and whether something's appropriate for their portfolio. So with that, I'm very much like fundamentals only, not trying to necessarily play momentum, although some clients do want that. So, but my own personal instinct.
Do you think you've learned since
I'm
being here that open yourself up for technical analysis a little bit more?
Yes, that is something I want to study a little bit more, because I think it more tools in your toolbox never hurts. So eventually, but it's not high on my list at the moment.
What's your perspective? Is there any place for technical analysis?
So,
because me and you discuss this all the time, and I have a set structure in my brain how this works. And I'm not saying I'm right or wrong, because I've been right and I've been wrong. But
there's a lot of people who believe in it, and so I think that helps it to work. And I haven't done a lot of searching, but the searching I have done, I've not been able to find an academic study that shows that those strategies work consistently. And some studies say they work one way when other studies say they work the opposite. So it doesn't seem like there's a lot of agreement in the space from what I've seen.
And so to explain what fundamental and technical analysis are, because I think that basis needs to be described. Fundamental analysis is what Jay's premise is, and what my premise on the firm is you buy companies that are fair valued or undervalued, that has financial moat, that you understand as the investor that the company can increase its revenue, increase its earnings, its free cash flow. Everything goes up because of based on fundamentals of the actual earnings that they're reporting. Is that correct?
Yeah. So when drawing a line between fundamental analysis and technical analysis,
just the fundamental side, how would you describe what fundamentals are?
So, fundamental analysis is, I mean, really the most important part of it is focusing on the cash flows. I mean, that's the bedrock. And so everything else is really just trying to get at a more accurate understanding of what those future cash flows are going to be, developing a clearer picture for that.
Which is the mode, right? Getting a clear understanding.
Yes, the mode of how they're going to continue to generate profits versus their competition.
Is it a one-time opportunity that they capitalize in and it's just a fly in the pan and it's like really, or are they building a structure? Like Apple is a great example, right?
Yeah.
And so Apple created a wide moat because they invented a phone that nobody else had in their, 2008, 6, whatever. 7.
2007.
Yeah, when they created the iPhone, right? It created a wide moat for them. So this was incredible because it wasn't a one-time thing. They increased their cash flow because people started buying their products, which gave them a higher ability to increase their margins, which gave them a high revenue because their sales increased. All these things complement. That's fundamental analysis in its core.
Yes.
Okay.
Yeah, and
now switch over to technical analysis.
Okay. So technical analysis is really trying to gauge market sentiment, and they do that through measuring volume and price action, how those interrelate through charts. And I don't know all the different types of charts and patterns that they have, but basically they assign certain probabilities to certain chart patterns that they see. The most famous one, I think, is probably the head and shoulders pattern.
Yeah, but
or
it's
the inverse.
Or Elliott waves, huge.
And that's of all the rage these days, apparently, but I don't really keep up with the technical analysis side of things.
Yeah, so Elliott wave is a huge one right now. So here's what I understand it as. And so I look at the sentiment of the consumer's appetite for a security. And if their appetite for that security works in a pattern, because it's like the ebb and flow of what the market is. And so since information has become, the barrier to achieve or gain information has become shorter and shorter and shorter and shorter over time, it allows people to interpret the same data, and patterns are created because of that. And so those patterns give you some type of systematic advantage to understanding how the market's going to move. But the problem is the error rate is what you're getting to. There is not substantial studies to show that technical analysis has any bearing other than a coin flip. And
from what I've seen so far,
that would be fairly accurate, right?
Yeah, I need to do more searching because you never know, there might be something else out there. But another thing I'd like to point out is just kind of maybe the difference in approach and their theories, which is that fundamental analysis, you're coming to a value and there's always subjectivity in everything, because part of reaching a fundamental value,
you got to give it a multiple no matter what you do.
You have to assign a multiple and you have to use a discount rate. And the discount rate you come up with, I mean, you're deciding what is my personal risk premium.
It's still technical analysis, no matter what you say. Yes, it is, because you got to give it an arbitrary value that you, as an interpreter of the asset, values the multiple at.
Yes, but I still think it's less subjective than technical analysis.
Yes, I agree with you 100%.
Because there's reasons behind why you're assigning those values, and I mean, few things are absolute, but
yes,
you get a lot closer. And what I like about fundamental analysis is you're backing up your reasoning for why something is worth a specific price. Whereas
you're just given supporting data.
Yeah,
right?
But technical analysis, the way I see it, their work depends upon people in the market being smart investors. And at the end of the day, they're waiting for confirmation, and confirmation is the fundamental analysts getting there first.
Right. So you're talking about an effective market, or efficient market, efficient market, right? So here's the solution that I base my firm off, and this firm off of, is I don't think either one's right or wrong. I think our firm is based upon the principle that you have to have a bedrock of foundation of fundamentals. And if a company is fundamentally sound, has a wide moat, and has a forward guidance of top line revenue, operating income larger than it was last quarter, last year, last 3 years, and their free cash flow in that company is still increasing, their dividends are increasing if they pay a dividend, their sales is increasing, all those things are on the fundamental side, and those things check the box. That the real question is because those things have checked the box on so many companies over my 15 years, and then all of a sudden the stock still goes down. So I think you have to back up the fundamental analysis with a technical analysis to say, does the stock have, and Zach's research did a good thing on this, does it have momentum? Is the relative strength of this security from a technical side there yet? And sometimes you can buy a great stock, and this is why value investors do well over time, but they always have to put that caveat over time on it.
But
because over time, they're always going to be right.
The question is...
They're not always, but over time, the probability is going to be higher, and I'm talking about really higher, if time is on their side, because no matter when they buy it, this is the Warren Buffett effect, right? That a value is going to be baked into the stock price eventually whenever sentiment of the fair market, because no matter if somebody declares it's an efficient market, and it's never an efficient market, right? When you take human nature out of the market, that's when it will become a fair market. But we're never going to do that because we have economical bias, behavioral economics as investors of we like a stock because we like the product that it produces, and now we're going to invest in that product, whether the fundamentals are there or not. And this is why there was a term called a cult stock come out, right? And you could look at Tesla, 10, 15 years ago when it first came out, where valuations did not support and still doesn't to this day support the current valuation from a fundamental standpoint. Wouldn't you agree? I think cannot justify some of the stock prices at Palantir, NVIDIA. I mean, look at some of these stocks today that are the valuations is unbelievably unrealistic.
Correct. And that's
where fundamentals go wrong.
Part of the issue, yeah. But when it comes to the market not moving in the time frame that you want, I think, is patience such a terrible price to pay for glory and high profits? I mean,
it's the evil of all investors.
Yeah.
Time is the worst investment catalyst. No matter what kind of investor you are, time is the only thing that you have to fight against. Because I could own the greatest investment ever, unequivocally. I could own the greatest investments of all time, but I could own it in the wrong time and sell it at the wrong time and take a loss. And the only thing that equals that out is time. If I would have held it a little bit longer, if I would have sold it earlier.
And therein lies the importance for having parameters as to when to take profits. Not
only take profits, but having that soundboard.
Mm-hmm.
That's why I look at AI now, especially after so deeply being involved in it over the last 2 years, and really concerned about some of the way that the financial industry is going to change over the next couple of years to a decade. And I'm committed to retail investors and institutional investors will always gravitate to people that can give them a better perspective and open up a blind spot for them on the way that they're investing. And if you can provide that value, then you're truly providing a commodity that people will actually buy. And this is why I look at is there going to be change in the entire industry of the way the United States is goods and services are going to be produced in the next 10 or 20 years? 100%. Some of the jobs that we're seeing out, like I saw a Starbucks AI, I don't even know what it's called, machine that was making every drink 3 times faster than what a barista could do.
Was it like a robotic arm?
Robotic arms.
Okay.
There was like
I've
3
seen
of
those,
them.
but specifically
right.
for like more like burger chain type environments.
So the question is all retail going to go away? Probably in the next 10, 20, 30, 40, 50 years. But would you, as a consumer, want a barista to go fix the drink and it's perfect every time and it's exactly the way you want it and it's 99.9% accuracy? But would you want that machine to give it to you, or would you want somebody to say, the Chick-fil-A model, how can I help you? It's a pleasure working with you. I would pay a little bit extra to have that. It's a pleasure to take your order, right?
That's what it's going to cost.
That's what it's going to cost. That's
Yeah.
the difference. Now, in the behind the house, are they, in the back room, are they going to have the automated machines? Yeah. Same thing in our industry, right? Is automation, and I mean, we talked about this there was a huge prominent financial services firm that was talking about that they had 11,000 financial analysts. Or what's your job title, by the way? Financial analyst, right? 11,000 of them, right?
So I'm actually thinking we should change my title to advisor to the advisor.
I think there's a lot of merit to that, right? So, but financial analysts, 11,000 of them at this firm. I mean, it's a massive, one of the top in the country. But what they said in this article was that it took an average of 12 attorneys and a half a dozen financial analysts to create what they call an S1. An S1 is the public filing for companies to go public. It takes them I think it was 6 or 12 weeks to do it. I think it was more like 12 weeks. And in fact, I know it was. In 12 weeks, a dozen people, imagine how much the cost, and these are high educated attorneys and CFAs and all these other people in that space, right? And so expense out the ass. I mean, just expense. And they took that and gave it to an AI, gave it all of the S1 filings for the last 100 years and told it to write this S1 filing for this company. It did it in 4.5 minutes. It was 98% accurate.
Wow.
And so you just take a pause at going whew, how is that going to change? But yes, that space is going to change. But is it going to change where the 11,000 people that are in that space are going to be without a job? No. I think it still takes somebody, a group of people in an organization to go where can I repurpose that knowledge to keep growing? Just because things that are being done I think the barrier to entry now, and here's my point. Things that have been done and repeated and it become a cookie cutter within that used to take years, days, and weeks to do. Once the system understands it, it's going to be automatic immediately. So you're going to have more people that are really, really employed, that are more cutting edge, more creative, and more pushing the envelope of advancement. Those are going to be the people that are going to be in value.
Yeah, because, humans will never beat computers at synthesizing data, but what computers will never be able to do, I don't think, is be truly creative. And so that's really where people need to focus on developing an edge, is really wisdom and understanding.
Isn't that great? I mean, you're going back to, there's some biblical things on that side of it, right? And so the wisdom side always seems to, there's a couple of kings going back way back then to say, hey, if you could ask for anything, ask for wisdom. Mm-hmm. Yeah, just saying.
Thinking ahead, he was ahead of his time.
He was way ahead of his time on so many fronts, right? And so I go back and I read Proverbs, and I go back and read Marcus Aurelius's Meditations. I read that. I try to read. I wish I could say I read it every single year. I'm trying to adopt that concept, is to reading things like that all the time to renew my mindset. And if you have not read Marcus Aurelius's Meditations, please read that. I would tell you, read that every single year, because it tells you on somebody from thousands of years ago that it could still apply, and it does apply to the way that somebody that has so much power, so much wealth, and so much influence in a society that was pretty much, that he had the same struggles of what most people do today. Like, I mean, when he talks about struggling on getting out of bed in the mornings because it's warm and it's cozy, but you need to start your day, right? Things like that I still like. I mean,
It's the original self-help book.
Yeah, it is the original self-help books, right? And I look at things like that to always encourage me, because it is very, especially in my role today, and you could probably attest this as much as I can't stay on a subject very long, because I think I tackle probably 15 to 25 things, massive subjects a day. On most people, I would say. Do you think most people tackle huge projects the way that we do here at this firm? I mean, just think about this week.
Probably not. We do a lot. We're a small team, and everybody's got a lot that we're working on. So, I think we, what's the expression? Punch above our weight class, or
yeah,
I don't know.
That's crazy.
Yeah.
And I look back at it and I was like, we looked at help analyzing a crypto mining facility. We analyzed 6,000 acres of oil, mineral, and working interest this week.
Mm-hmm.
We did an arbitrage on energy between the two. We worked on building a multi-custodian platform, a Bloomberg terminal platform, and still had a dozen plus client meetings. I mean, I just look back and when you're in the moment, and I'm an intense guy, and I irritate the shit out of everybody in the office, right? But because of the simple fact that I think we punch above our weight a lot, and that expectation is kind of like the Chiefs, right? And everybody knows I'm a Chiefs fan, right? I think you would say the Chiefs punch above their weight. Like, everybody's like, I want to get to the Super Bowl. The Chiefs are, I want to get the multiple, right? I mean, it's like, I always go back to, and I can fill me in, Jay, who wrote this, and you might not know, but like, people underestimate what they can do in a year, and they overestimate what they can do in a day. I think that's what it is. And my deal is like, if whether I'm wrong or right, we go up or we go down, I still believe that we can grow something and help people. And the core of the firm is be a servant. That's just, everybody has these mission statements of just this complex thing. I just think at the core of it is like, if you help people and become a servant, I think everything else does not fall into place, right? I think it's that simple, right? If you serve other people to help them achieve what they want to achieve, and you do it ethically, morally right. I'm not talking about doing things illegal. I'm talking about just like, hey, I'm trying to help you.
Go on the extra mile.
Doing everything you can. But most people don't know what they need help with, right? Because they don't have that foresight, or they don't have that expertise to actually go into there. So I think that is the base core of what people crave and they want, and that's the value that we provide. And it's cool because that there's a detriment to that, right? The detriment is, do you take on more than what you can actually output? And so if you take on more than you can output, then you water down that value because you can't do everything exceptional. And so it's this yin and yang, being in the administrative side of it and the financial side of, hey, how do you turn a profit so that you can hire more financial analysts so you can lay them off and then turn them into AI eventually. But right, I'm joking, right? But you see my point. It's like you have to make a profit in the ability to give the services and qualify that time. And that's the hardest thing, because you want to help out everybody. That's a hard part. So, and which, I mean, we talked a lot about that side of it, but you're a huge history buff too, switching gears, right?
Yeah.
So I love this conversation.
Thomas Jefferson said that history is philosophy in action. So I think reading history really helps you. My view on it is it helps you better perceive the future because you know it's already occurred. So I mean that kind of tells you the very large arc of the larger trends that are going on, you know, culturally, politically, and so I mean nothing's new under the sun. So I think having a strong grasp of history really helps in kind of seeing somewhat through the fog of the future. I mean, it's impossible to know what's going to happen, but part of the role of finance is you have to anticipate where the market's going, where the economy's going. So that's part of what drew me into it. It's just an immense challenge, and I don't know, I like taking it on.
And I find that that's like a lot of analysts that, you know, they have that secondary thing that they base their analysis on. And I think history is one of the best ones to actually do it on, because if you don't have, you can't have a good analysis on what the economy is doing if you don't have a good ability to love what it did. You know what I'm saying? So it gives you that. It's flawed, though. You have to understand that. You have to understand that you become cognitively or historically biased in the fact that, hey, it did it this way for so many times, and it's going to do it this way in the future no matter what, right? And so you can't have that bias. So I think it paints a picture, and then there's intuition that plays into it. And so switching back over to, you know, technical analysis and how I perceive it, just so we can clear that up, and Ryan, you might have to mash these two gaps together, but my perspective is I think you have to have fundamental analysis to understand if long-term a stock is under or fairly valued, that has a wider moat that is going to increase in value over an extended period of time. I think alpha is derived from finding those companies and understanding the exact time to the best of your ability, and it's not science, to get in. And there's so many times where we're like, oh, this looks really good. Fundamentally, it's awesome. And then you had a 15% drawdown, and then it did exactly what you want, and you ended up making a lot of money, and you're up 25%, but you could have been up 40 if you would have timed it exactly right. And it's impossible to time it right. But I think my point being is marrying fundamental analysis with technical analysis together, and saying, okay, and I think it has to be in that order. You have to find fundamental structure and processes and systems inside of the way that you invest that is going to be back-tested and historically accurate on what it's going to do. Then you have another process on, is that moat going to widen? Is that company's expertise, management, and ability to grow the company that exists and expand? And then you go into the technical analysis, because the problem is if it was an efficient market all the time, it would be an efficient market all the time. So all we're trying to do is go to Dillard's and find a $2,000 suit at $1,500. You know what I'm saying?
I prefer 500.
Or yeah, right? You want that 10x bagger, right? And so you could go find those companies that, hey, this has been mispriced, and that's the holy grail. When you find securities that are incredibly fundamentally sound, they have a wide moat, and they're mispriced in the fair market value of the market because of human nature, and you invest in those guys, and then you just wait. And then you take fundamentals come in, and you bought them at a fair market price, well up under their fair market value, and then you bought them at the right probability of them being undervalued, and they're not going to go too much lower. And I've got it right, I've got it wrong. We consistently do this all the time, and that's the art of it, and I think that's the fun part of it. Because if it was like systematic, I'd be like, shh.
I mean,
is
if it was
boring.
easy, then there'd be no money to be made in it. So.
But if it was binary and black and white and you're like, yeah, you're right, you're wrong, then it would not be fun either.
No.
It would be like, yeah, he's right because all 12 of these things check the box and automatically the next day it goes up, right? It just doesn't work that way. And so that's what we do, right? When you say that's an accurate argument,
Yes.
yeah, that's pretty good. Now, add the extra layer of behavioral economics on top of it with clients' perspectives. And this is where I struggle the most. Because you love your clients and you want the best for them, right? And you have this bias. Every firm, every investor has a bias, right? And you believe this is going to happen, but it doesn't happen in the perspective and the time frame that the client wants it to happen. And that's when after 15 years, I had to put it away and go like, it's just bad timing. It's just bad timing. And we get it right 90% of the time, but there's those times where you're like, it's just bad timing. And you came in, they came in, you acquired them, you invested with them, and it's just, the economy just wasn't in that spot, and you had that drawdown or you didn't have the gains that they expected, and the behavioral economics got the best of it. And I think that's what makes our job extremely difficult. And that's why I always say that there's two sides of the house, the front of the house and the back of the house. How many analysts do you think could be in my job?
Analysts are not typically the sort that like to deal with emotion. So dealing with clients is not something I think they generally gravitate towards.
It'd be more difficult.
Yeah.
How many advisors do you think can be analysts?
I think you're pretty unique in that you understand a lot of this stuff. My perception from my interactions with people in the industry is that most advisors have not spent the time to understand fundamental analysis. And that's why I decided to go for the CFA designation when I was just getting out of college. I was thinking about going the advisor route, but I was looking at the different courses that you had to get through to get into the advisor space versus the analyst space. And I was thinking, well, I want to understand the fundamentals before I ever try and sell something to a client. And that's what ended up pushing me down the analyst route.
Do you think the industry's become commoditized to the fact that there's SMA managers, there's analysts out there, and there's hey, I'm a relationship guy, and I can just take the relationship and plug them into a model that's done by a third party and charge the same fees? That's where I think it's disingenuous. Because I would say 75, and I'm just making this number up, but I'm just talking about my own personal experience. 75% of advisors do not understand or have the capacity to advise a client on financials, on financial investing.
I'm sorry, could you repeat that question?
Do you believe that it's been commoditized to the point where it's a bunch of salesmen out there pushing a strategy that they've been sold themselves to a client, and they don't fully understand or grasp or fully understand why that model exists, and they're going on blind faith to what a client, they're aligning that risk into that client, not understanding what the underlying securities are?
Yes, I think the financial industry has largely optimized to gathering assets and less towards managing assets. And those are two very different skill sets. And I think there's starting to be a growing perception out there of that. And I think part of that was related to the '08 financial crisis, which, I mean, you can only anticipate so much. But I think that did leave a lot of people with negative feelings towards the industry. But, yeah.
Do you believe that we're going down a path in the next couple of months, couple of years, that's going to be one of the most concerning financial crisis that we've seen in the last 25 years?
In short, yes.
Why?
There's a lot going on right now. So demographically, the U.S. has been under the replacement rate for births since about the 1970s. So all Western countries generally are in decline from a demographic standpoint.
Why is that important?
That's important because the economy is people. So if you have less people, you generally have less production. And although you
and
would
less
think,
people consuming the production.
So you'd think less people, more resources to go around because we've built up so much over the years. And there is perhaps some legitimacy to that. However, we've also racked up a lot of debt that has to be repaid and a lot of obligations like welfare or social securities, the big one, really. So we've got trillions in debt, and the generations that are currently in the workforce are smaller than generations that are entering retirement age. So these people who have all these assets in their retirement accounts and in a lot of it in homes, well, the only reason they perceive themselves as wealthy as they currently are is because the asset prices are inflated. But with fewer people coming in after them to take over those assets, and those people generally not being as well off as they are, those prices are generally going to have to come down. Homes and other assets are going to have to come down because the people who will be buying those assets from them
aren't as wealthy.
They're not as wealthy, so they don't have the money to buy it at the current prices. So that is a deflationary argument. The inflationary side of the argument is the fact that we have about, I think it's around 35 trillion in national debt. But when you include unfunded liabilities, and that's stuff like Social Security and Medicaid, these are old numbers, about a year out of date from when I last looked at them. But we're well over $200 trillion in debt. And the unfunded liabilities, that's an estimate, so it could be higher, could be lower, because they're making assumptions about how those costs will increase and how much growth they're going to be able to get from the funds they currently have to pay those obligations. It's an actuarial problem. So it could be higher, could be lower, but generally we're over $200 trillion in debt as a country, and our GDP is about, I think 2023's numbers, I don't know what 2024's are at the moment. 2023's numbers was less than 30 trillion. And we have a lot that we have to pay out of that just to maintain the status quo, regardless of the current growing liabilities. So if you assume maybe you can make enough cuts, the Trump administration is wanting to make a lot of cuts to the budget. If we could cut enough to where we could allocate 10% of our current GDP towards paying off our $200 trillion in unfunded liabilities and national debt, you're still looking at a couple hundred years to pay off our debt. So I'm not sure where we're going to find the growth to pay for all of that. So that's highly inflationary, because human nature, looking back in history, people always decide to print money to pay off the debt in nominal terms, because with that going on, the economy can still kind of run. It's like an overheating engine. It's still working, but at a severe cost. Whereas if you try and pay it off in real terms, it's like the heart stopping. So
it's manipulating the currency. What it always comes down to is always the catalyst that I've always heard. That's the point that I get very, very emotionally upset on. And here's the thing: is I think our society's been educated not to understand what's going on in our government and understand what's going on in our currencies and what it is. And I love America. I think America is the greatest country in the world. But man, there's some powers that be that just understand this stuff, and we're educated not to understand it in society because they don't want us to understand it. They just want us to be the Rockefeller effect of being an industrial revolution, and you just are educated only to the point that you can work a factory, you can work a job, and you can do these things, and you don't ask questions. And I think this is coming to a head. And my own personal opinion is COVID really turned the light on to me. It's blind obedience to the science, blind obedience to the Fed. I mean, you got a bunch of fucking bankers that are controlling the Fed, that used to be Fed presidents at these banks, that are arbitrarily giving value to what inflation should be, using rates. I mean, it's absurd because my biggest problem with fiduciary responsibility for any industry and any person is cognitive bias. I think that is the basis level of it. And if you have a fundamental bias of I'm going to benefit by doing X, you're going to do X every single time. And so when you give bankers and you give Jamie Dimon and you give all of these banks the ability to influence the Fed or be at the Fed as soon as they leave these banks and to control interest rates is incredibly, incredibly wrong. And I mean, being in this business for 15 years, I'm like, we sat on Wednesday and sat glued to the TV and glued to the report to see what Powell
the whole world did.
Yeah, what Powell did.
Mm-hmm.
It's crazy. Like, if you believe that Donald Trump and Biden control our government, you are smoking crack. Jamie Dimon and Powell and these guys, those are the guys that control our government. I mean, there's a report that's been out. It's unsubstantiated. I hadn't researched it. I hadn't reported if it's accurate. But the unverified report that I saw was that J.P. Morgan gave Obama a hire this in your cabinet, and 99% of them would hire. Right? That's my problem. And like that has to be fixed. I watched a dozen confirmation hearings on Trump's cabinet picks. And the grandstanding aside, and it was grandstanding on both sides, why he should be, why he shouldn't be. But the grandstanding outside of it all came down to the simple fact is how these senators and congressmen were going to make money. There was going to make money in the detriment of the citizens that they are supposed to represent. And I think that happens time and time again, right? And it was just makes me sick. The fiduciary standard that I uphold in this firm to the advisors, junior advisors, analysts at our firm would not even come close to the fiduciary. I mean, we have such a high standard here by the SEC and FINRA that we have to uphold, that we do, not only because it's right, and that's my perspective, it's right, but also to the simple fact that I go look at the senators and congressmen and presidents and publicly traded CEOs. How many CEOs went and visited Trump? And then all of a sudden, all the CEOs in the tech industry visited Trump. And you think this is right? I don't give a shit. I think it's right for the economy. Do I think it's right? No. How many CEOs of the tech industries went and visited Trump in Mar-a-Lago over the last 2 weeks or a month? And then all of a sudden, he's got a $500 billion AI thing that's going to come out. And, oh, man, they're on the bandwagon this time. They hated him in 2016. But in 2024, they loved him. Right? It's wrong.
Yeah. I mean,
is it right for society? Yeah, it probably is. We have to win the AI race as a society, right? Is it right? And it's complex, right, Jay? It's complex. But I'm telling you that right now, those conversations with Trump in the ballroom of Mar-a-Lago and Biden and Obama and every single else should be publicly recorded, should be open source, and should be able to be viewed at any time by the citizens of the United States. Every backroom, conference room meeting that a senator or congressroom had to be in a conference room like this, has to be recorded with the people that they meet with, and you have to be able to view that.
We definitely need more transparency.
That's all I'm asking for.
Yeah. There's still conversations we don't want everybody to have access to simply because those would be open to
national security threats. I understand. Like take this on like a theory, not implementation.
Yeah.
Does that make sense? Because I mean, okay, so I watched a documentary that said that there was a computer chip. I don't know a computer chip, but this is incredible. I watched this last night. That this company said that, computer chips in the 1980s, 90s, early 2000s were like very, very like fragmented waves and a lot of noise and all this other stuff. And this computer chip company manufactured a chip that like cut through that wave in some degree. And I'm paraphrasing. I don't fully understand it because I didn't research it, right? And they had a cutting edge for it. 2 months later, Qualcomm came out with the exact same chip that the small cap, non-public company did. And they stole the technology is what it comes down to. They had a meeting with Obama, right? Obama had a meeting with Qualcomm. They had a meeting on site with that company. And all of poof, that company went to zero. Qualcomm went to 5,000. You see what I'm saying? And the exact same time frame that happened showed a meeting with Obama, showed a meeting with that Qualcomm, and showed that they had that technology and they stole it from somebody else.
It's a rotating oligopoly.
Yes, that's what my point is. Is that true or is that not true? I'm not making an accusation. I'm just telling you what I saw in a documentary. I don't know if it's true or right. I'm sure Qualcomm was above board on everything. I'm sure this was all made up, and Obama has been the perfect president of all time. That's what I'm telling you, right? But I'm saying where there's smoke, sometimes there's fire. Does that make sense? And that's the point I make. Like, if Qualcomm did that above board, why did you have a meeting with President Obama? Why did you have a meeting with President Obama that squashed that deal? And how all that transpired. There's transparent. That goes back to the transparency. Every meeting that a president makes, every meeting a senator makes, every meeting that a congressman on the state side and on the federal side should be a completely open source. The meeting has to be recorded, and it has to be, unless it's national security and defense, right? And especially if it's financially related, should be public instantly.
I think that's a good idea, yeah.
I'm glad we all agree. Ryan's loving me right now.
Post is going to be a nightmare. Post is going to be a nightmare.
Ryan's telling me that post-editing is going to suck. Because this is not going to get through compliance. Am I wrong?
No.
Where are we messing up?
Yeah, that's...
We'll let
Do I want to be audited by the SEC every single week for the next 3 years? No. So all this is going to be cut. Right? So, hey, let's. I mean, that was a good rant, though. I got to tell you, that was a good rant. So, I did, man. I've been reading and educating. So what do you we talked about why you believe the economy's not in a good place and we may hit a recession. Why do you believe it's in a good place?
Why do I believe it's in a good place? Well, I
I have my perspective too, but go ahead.
Regulations and taxes are
a problem.
A huge contributor. They're very fundamental. So if you get regulations and taxes right, then it makes everything else way easier to go well. So lowering taxes, generally always a good idea because that just allows the free market to operate. And same with regulations, cutting regulations, just let people make the smartest decisions they can and don't time up with a bunch of red tape and let the entrepreneurial magic work. So the problem is, I mean, he's instituting those policies now, some of them, not all of them. And I mean, there's going to be a lag between the implementation and its actual effect. So we've got lots of problems just in general from the cycle of the economy. It's on its way down, right? Lowering taxes and reducing regulations will help reverse that, but probably not before we go through some kind of a downturn.
So
but you never know. I mean,
let me give you an analogy on this one. So Trump was in office 7 days, right? 7 days. Mm-hmm. Okay. The economic data came out on eggs, and the MSM mass media already blamed Trump for the inflation on eggs, even though the data was actually for December.
It's because everybody knew he was going to be president, and that's where the problems came into play.
And the thing is people actually believe this shit. It's like, it's crazy. It's like he wasn't even president at the point in time. But I'm going to tell you, you know, I hope he gets what's the good analogy on this? It's like the honeymoon period, I guess is the best way to say it. I hope that lasts as long as it possibly can, and he slams through everything it is for pro-business, pro-America, and making everything equal. It is, right? From, you know, I asked you to research what the deficit is for Canada to the U.S., and you found out what today? In the middle of a meeting.
It's $45 billion for last year.
Yeah.
So
yeah, it's crazy, right? And I screamed it across the room in the middle of a meeting with the client in there today. My point being is that he is in a 2-year, at best, 2-year time window where he has the House, Senate, and him. We're slamming as much policies as he possibly can. As long as society and the populations of the citizens give him a check where he's not being an oligarch or he's not being a tyrant, and he's doing things to promote the American, which I actually think since he was attempted assassination, his rhetoric has came down. His rhetoric, and it's really coming down to him being a servant, right? And he's just trying to make America better and take care of the citizens. And that's really where it comes in. I'm not pro-Trump. I'm not against Trump. I just want a better America, right? But I want, you know, transparency. I want that ability to understand where our economy is going. And I don't want the oligarchs. I don't want individual companies to have a competitive edge because they have lobbyists. Those are the things that I don't want to have. That stuff. But I think if he doesn't capitalize better, he is doing an incredible job. My scare is he's doing everything through executive orders, and it's not going to be put into law. That's my scare, right? Because it's going to be this like, hey, we get 2 or 3 or 4 years, and then Dems take over, or another party takes over. I don't mean Dems specifically saying they're bad, but I'm saying another party takes over and unwinds all the executive orders, and we get this like pinball effect where, hey, it's pro-business, and then it's pro-government, and then it's pro-business, and then it's pro-government, and it's like this 4-year yin and yang effect, and nothing's actually qualified into law. It's all executive orders, and it's going to be this nightmare that we live in going forward. But my point is, it's like he better get stuff done quick because we're fixing some of the stuff he's doing. We talked about this today. We had an incredible performance in the portfolio this week. Incredible. One of the best I've seen. And my point or concern I have is he may create massive inflation. He may create, because it's like remodeling a house in the middle of you living in it. Think about that for a second, right? So he just, this morning at 9, 10, 11 o'clock, there was a rumor that he's going to put the 25% tariffs on Canada and Mexico in March. And everybody's like, yay. The market's done great. And then all of a sudden the market incredibly flipped as soon as the White House came out and said, nope, we're going to do it tomorrow morning. This is Friday, Saturday morning. It's done, right? And the entire market flipped at 180 degrees. And so is tariffs a good thing? If Dr. Starr was here with us right now, our economist, he would say tariffs are never a good thing. And I agree with him to an extent. Tariffs are never a good thing as long as there is equilibrium between whoever's providing the tariffs. If both countries have the same tariffs expectation and tariffs into their country, then no, tariffs are not a good thing. But how many times, and I said this in our meetings, I've said this to you, how many Fords or Chevy pickups do you see in the UK? Very few, if any. That's because they have like 50 or 100% tariff on U.S. vehicles in the UK. And if we don't have that same capability in the U.S., that everything comes to equilibrium and it's fair. You want to tariff us 50% to provide our products in those countries, we're then to tariff the same thing over there. And it becomes that. And it's been this democratic political, Jesus. They gave $50 million to what country was it? Uganda or some shit for condoms.
Just about every country, I would imagine. We're throwing a lot of money around.
Yeah, it's just it's done. I think our country's done. I think the people like me, the people that run businesses, the people that understand basic finance are like, we're done. I'm done completely across the board. And where I think we're going from a financial investment structure, investment strategy structure, is that we're going to go through a very short period of time. It's going to be rough. I think it's going to be rough. For 3, 6, 9 months, it's going to be rough.
And we've generally only talked about dynamics within the U.S., but, an important part of our economy is exports. And, Europe, their economies, Germany especially, are really hurting. Japan's not doing great. And
UK's doing horrible.
Yeah, UK's absolutely terrible. And China, it's not looking good. They're also a country that's in demographic decline, but they've kind of reached the end of their real estate boom, it seems. So they've kind of have to find a new way to stimulate growth within their economy. It remains to be seen where that will come from. So all those things, are going to affect the income we get from trading with other countries. So that's another factor to take into consideration as to how the U.S. economy and market do. Because, if people and businesses are struggling in other countries, they're going to start. They have bills to pay too. They've got rent. They've got debts that have to be paid. So they'll at some point repatriate the funds that they had in the U.S. in the U.S. market. They're going to potentially sell their equity positions, their fixed income positions, take those back and use them to pay local obligations with. So if the rest of the world isn't doing well, it's hard to quantify how it will kind of shake out, but that'll definitely have a negative pull on the U.S. economy as well.
Do you think that's going to be replaced by Bitcoin, digital currencies, as a catalyst to actually? I do. Whether it's ethical or right, I think they're going to replace some of this debt, some of this global volatility with, hey, we get this new shiny thing, and we're calling it digital currency, and it's more transactional without any third party in between it, so it makes it more transparent, and it makes more easy to prevent fraud and all the things that I love about digital currencies. Do you think that's going to be the saving grace that everybody's? Shit. Texas just announced that the lieutenant governor announced that he's looking at a Texas reserved currency. You know what I'm saying? Mm-hmm. It's like, do you think digital currency is going to be?
Yeah. So I'm no expert on cryptocurrencies. Early on, when I was first exploring them, I I liked them, but I'm just kind of falling back on the principle of don't invest in something you can't really understand. I don't have the technical background to thoroughly investigate crypto assets. So for that reason, I'm refraining. Maybe it's all it's hyped up to be, but I do think there's a risk that it just becomes the next tulip bubble.
Explain what that means.
Okay.
That's awesome, by the way.
So the tulip bubble was a phenomenon which happened in
It's how derivatives got created.
in Holland back in the 1600s.
1700s, I can't remember.
Yeah, right around there. And essentially, Holland, they like their tulips. And I think it specifically was a bubble that developed around black tulips, which are the result of a mutation or bacteria or something that causes them to turn black. So they're not healthy flowers, but they apparently looked really cool. So people were trading houses, mansions, lots of money for tulip flowers, and it was just very absurd. And it went on for several years, and eventually, like every bubble, it popped, and most people lost most of their money.
Yeah, but the point to that is they came out with a strategy that people would say, I can't grow as many of these black tulips or just tulips in this general, so I'm going to give you an option to be able to buy these tulips that I grow in the future, and and they started trading the paper between the two, and now I'm being very, very vague in this because read the book. I forgot what the book was on it, but I read the book, and the tulip trade and derivatives came off of that, right? So it's like, hey, I don't have that underlying security or asset, but I'm going to give you some type of future or option to be able to buy these things on credit, and that's what created the actual fall of it. And so it's really what options or futures trading was the first. I wouldn't say it's the first foundation of it. I would say it's the first iteration of it.
I need to study that history more. I hadn't heard that part of the story, but yeah. So anyways, that's my personal view on cryptocurrencies. I think it's not something that I have the time to really delve into to the degree that I would need to before I could really recommend it. So,
I'm concerned about cryptocurrencies. I think it's going to be, look, here's the best way Dr. Starr told it to me. And this is, I think, is relevant to people, and they need to understand that, is you are a value investor, so you invest off of the value of the free cash flow of a company, right? So gold, silver, crypto, things that don't provide value, but they have an intrinsic value to them. Their value is only derived from what somebody's willing to trade you for that value in the future. So we call that a still asset. And so when people understand that it's a still asset, the only way that some of these companies, there's a big famous one, I can't mention it here because can't mention individual securities, but it's the only one that is saying, like, I believe that this intrinsic, arbitrary, still asset is going to be worth more in the future than it is today. I'm going to issue a ton of debt on it with nothing to back it up but that asset that theoretically has no value. And I want people to invest in my company, which is publicly traded, and I'm going to go buy this still asset that could be worth more, could be worth less in the future. And I'm going to go on CNBC and every other news network and scream at the top of my lungs that this thing's worth more value in the future than what it is today.
Yes. So the difference
Isn't that a good argument? Isn't that a good analogy or a good explanation of what that company is?
I think so.
Is it right? Is there a fundamental value for it? Is the SEC ignoring things? Right?
I'm no expert on the SEC and their operations, but
that's my point. Right? That I don't know. I think crypto is going to be a great resource to us. I'm a huge advocate of not crypto as much. I think it's going to have huge value. I'm a huge fan of it. I get that. I know I'm being negative here, but I actually believe in the blockchain.
The technology is good. I question the argument that it will be used as a currency, or at least that it's truly a hard currency, because the difference, kind of like what you were saying, hard assets, their value is largely determined on what somebody else is willing to pay you for it. The difference between cryptocurrency and things like gold and silver is that although gold and silver are not absolutely cryptographically fixed in their total supply, they are difficult to acquire, so they don't grow very quickly in supply, but they have real industrial uses. Cryptocurrencies,
It's a great point right there.
Yeah, their supply is absolutely limited cryptographically.
21 million.
We'll see how
Bitcoin,
quantum
no
and
matter
other things
what.
affect that. But yeah, they're famous for their
Scarcity.
their
All it
limited
is.
supply, but
That's all it is.
they have
scarcity.
they have
supply.
no real use. And so what is fiat currency? Fiat currency is a symbol that you exchange for real goods and services because it's been declared by the government or by culture
society,
that this is what we'll use as a medium of exchange. So that's why I kind of like to, I don't know, prod a little bit and say that cryptocurrencies are actually fiat currencies because they have no real fundamental value other than the fact that people culturally are deciding we like this more than, say, the US dollar.
Yeah, it's just a faith-based structure or concept that people believe in, and that's the only value that it has.
Yeah.
And as soon as you have enough of society believing that, hey, this is what's gonna be the thing that we do, then it has value, and that's all it is. And that's crazy to me inside of there. This is why I'm a big energy component. Like I'm a huge. If I look back and 15 years doing this in West Texas, and I have a bias, but I would say, go watch the movie Landman. I don't think it's accurate in a lot of aspects, but the principle is accurate. If everything stops without energy. And number one energy source is oil and gas. And that's going to be, like, if I invest in anything going in the future, it would not be real estate. It would not be crypto. It would not be any of those things. It all comes down to the common denominator of what you have. Crypto does not exist without energy to actually produce the servers, to actually do the hash rates and whatever that is. It all comes down to energy. And like I said, we analyzed a huge company today, and I found the biggest arbitrage there is in society right now is energy. And my own perspective is, like, if you can figure out a way to produce energy at a extremely cost-effective way to support the actual mining of crypto, and you do that at a cost that is cheaper than what the current cost is to mine that crypto, you would be a billionaire 10 times over again, right? And that's been going on for a decade, right? This is not like I'm the dumbest guy in the room most of the time. So this is not anything new. And we're such innovators. No matter, like, what happens, like, yeah, we're going to go through a recession. It's going to be a bad one. I don't know if it's going to be because of Trump's tariffs. I don't know if it's going to be because of the society that we live in and the drunkenness that we had over the last 6-8 years. But I can tell you that we're going to be resilient as an American society. And I would invest in America over any other company in the world, but it doesn't mean I don't diversify outside of America to actually weather that downturn. And I would say I look for more of an energy play, and energy doesn't look attractive here currently. So I'm not saying put this on, like, rubber stamp it and it's ready to go. And Brennan said this on, January 31st of 2025, and it's true to tomorrow. I'm telling you, like, this is like a long play. Like, energy is still going to be a demand in our society for the next 10, 15, 20, 50 years, whatever it is. right? That is going to be the biggest play inside of it. I am encouraged about the America's energy ability to actually create substantial energy independent of other countries. I do believe that we need some type of global relationship with all current countries to be able to not tariff each other into the most worst inflation in the world. And I think we're going down that path. Wouldn't you agree?
It seems that way. Yeah, it's hard to picture how we don't have sustained high inflation.
Do you think we get lower interest rates before we get the higher inflation? I do. That's my holy grail. I've been screaming that for a year now.
Yeah, I mean,
there's no way around it. I think I go back to, if you're going to, go through remodeling your house, you're going to create an economic recession, and that's a good thing. But then you're going to get massive inflation. And what I'm worried about is stagflation. Can you explain what that is?
stagflation?
Yeah.
So stagflation is where you have an economy that's not growing, or it's growing very little, and yet you still have increasing price pressures within the economy. So generally you associate increasing prices, inflation, with a growing economy, but stagflation, the most common referenced instance of it was the 1970s. You didn't have a growing economy, but you had an oil spike and prices, just skyrocketed across most things, because like we were talking about earlier, oil is so fundamental to having an operating economy. So if oil goes up, it's going to put upward pressure on prices pretty much across the board. So
paraphrase there, you're going to have a higher unemployment and higher inflation.
correct. Yeah, unemployment increases and things become less affordable.
Right. So if you have higher unemployment and higher inflation, how does the Fed, which we love the Fed, right? How do they react to that?
So generally, to try and control inflation, they raise interest rates, but then there's
So what
a
was
lot of people
interest
believe-
rates raised to in the 1960s and 70s when you had the most prominent stagflation?
So, I mean, I think it got up to about 20% or so. It was really high.
Yeah,
And,
that's my point. That's I'm glad you said that.
So to the
With that
extreme, it probably does help to control inflation when you make that large of a change. But there is an argument to say that interest rates are actually inflationary, because interest rates are the cost of money, the cost of borrowing money to go and do things within the economy. So if you're making money cost more, then that's probably going to affect other assets and how they're priced. But generally, higher interest rates, it's argued, slow economic activity because it's more expensive to operate.
Yeah, the cost of capital.
It reduces it effectively reduces demand. So.
Yeah. That's the problem that I have into it. But I think there's two sides of that. It affects the operation to expand because the cost of capital is higher. But what the side effect that I think people don't understand, and we're starting to understand it more than we did back in the 60s and 70s, was that now, because we are a debt society in general, higher debt is now going to put people under. Like, now we are a debt-based society. And I would love to sit down with somebody that says we're not. I'd love to. If you want to come in and say we're not a debt-based society, just come on. Put your application in with Ryan. He'll vet you out, and you can come sit in this seat, or we'll do it virtually. I don't give a shit, right? But we are a debt-based society. So if the cost of capital, and if you're in debt, is now 4, 5, 6, 7, 9, 10, 12, 15, 16%, then you're going to put individual consumers out of being a consumer because their debt's so high, and the snowball effect's going to happen.
All their income has to go to repaying.
Yeah. their income and also our country. Like we are now paying, what is it? 1 trillion. Yeah, you heard that right. 1 trillion with the T. 1 trillion in actual debt is being acquired by the U.S. government every 100 days because of the interest alone in our own debt. I mean, this is a snowball. And here's the thing, is like we've held none of these people for the last 20 years accountable. None. This should be criminal. This is worse than I can't think of a time that this has ever been this bad, and the malfeasance and the malpractice that we have as the people that ran this country that allow us to get into this debt, get to walk away from this thing, millionaires or billionaires. This is going to be bad for my kids. I have 3 kids, 20, 12, and 9. And my kids, they're not going to live in a better society than we are.
Doesn't seem that way. We'll see what kinds of gains come from AI and other advancements.
But you're
access
talking
to space.
Yeah, you're talking about efficiencies. You're not actually talking about, like, we have to unwind the debt. So now we're going to get into this, like, remodel the house that we live in. There will be conversations over the next 10 years on, do we just forgive the debt and start over? And that's where I think crypto's coming in, that says, hey, we're going to wash away all of our errors and our omissions and our imperfections. We're just going to forgive all this debt. We're going to start all over. But it's on crypto now. It's a digital currency. So all that other stuff is like irrelevant now, and the dollar's gone. It's the crypto dollar, and now it's all fresh and new.
So I think looking back through history, generally debt between countries is resolved through war. So I don't think we can just say we're going to ignore all this debt and it's just going to go away.
You don't believe in a forgiveness of debt?
Not at the national level.
National or global?
Yes. National and global. Because I mean, yes, the U.S. can, but see, then that's going to create a lot of civil unrest, because if the U.S. government declares a bunch of winners in one section of the economy and their debts get removed, well, that's coming out of other taxpayers' wallets, essentially. So that's going to create a lot of bitterness, and it's going to divide rather than unite, I think. Like the college debt, for instance, is a good example. Nobody that worked hard to get themselves through school debt free is going to be okay with people who didn't getting a free ride. Same with people who didn't go to college because they might have not gone to college simply to avoid the debt. And now they're thinking, well, what would my life have been? Potentially I could have pursued this dream or that dream if they'd have just paid for it, back then rather than now. So, and I don't think it's really their responsible decision to make. I think the issue is human nature of not learning that you should only take out as much as you're willing to repay.
So that's the point I was fixing to make. So I got to ask this question, and I'm not saying to do this. Please do not do this. I'm telling you not to do this. But what would it prevent somebody like me, or somebody that has very little, but in the global construct of wealth, I'm above average. Okay, I'm not oligarchy. I'm not worth 100 million. I'm just saying I'm above average. Just say screw it. I'm going to take all of my assets, liquidate them, put them in cryptocurrency in a wallet nobody ever understands, knows I have, sitting over there. It's secretive. I'm going to default on every piece of debt I have. Come after me. I'm going to file bankruptcy, and I don't give a shit because the fiat currency is going away anyways in the next decade. You can take all my assets because I don't really care, because they're actually tangible assets. And you never know, I have this cryptocurrency over here and it's hidden, because I know that's what half the politicians, and I'm being facetious here, half the politicians actually have done. And I'm just going to hide all my assets on something that you don't even know I have. I'm going to leak it out on a monthly basis, and I'm going to live live the best life I have, and I'm not even going to give a rip on it because y'all didn't care for the last 20, 30, 40, 50, 100 years. You took the dollar and you devalued it 99.7% over the last 100 years. You turned around and you ran up inflation on us. And now you want the American people in taxes to pay themselves. But you as a politician, you as a CEO of a publicly traded company that has exploited the consumer, that is where I'm at. What is going to prevent society? It's going to happen. I'm telling you, it's going to happen. That people are like, you know what? I just not figured out I can open up a wallet that's not on Coinbase or it's not on some type of exchange, and it's just a private, nobody knows it's me, and I'm going to take out as much debt as I possibly can. I'm going to fill that wallet for all that debt of digital currency, let it run up. I'm going to live off of that. Every dollar I make, I'm going to put into that digital wallet inside of there. I'm going to default on all my responsibilities, just like the federal government has defaulted on all theirs. If it's good enough for the goose, it's good enough for the gander.
I would just say that's a lot of institutional risk. Putting all your eggs in one basket, which is a given cryptocurrency.
Right.
Because
then I'll go buy some gold then and silver and own the physical commodity of gold and silver, and I buried in the backyard, and I'm good. What's wrong with that? If it's good enough for the government, why is it not good enough for us? If we're going down that path, why not just get ahead of it?
Well, people probably should get ahead of it.
Yeah, it's not a bad idea,
I'm not
is
sure
it?
there's
So when do
anything
we
wrong with it.
stop paying
What we really need
for
is
the government's malfeasance of our tax dollars? When do we say enough's enough?
Well, I think that
It's
time
happening.
was long ago. I don't think governments should be allowed to use debt, and I don't think they should be able to control the currency. I think currency should be operated by the free market.
That's great. You articulated that the best. Do you think government, and I love how they have this facade that the government does not control the Fed and they're independent and all this bullshit, right? Bullshit, right? That the Fed is no more independent than what the government is. Is like the Fed is the most criminal institution I think there has ever existed, and so might cost me my job, and they'll come sue my ass left 12 times over again. Ryan's going to cut all this out, right? But my point is wouldn't that be it, right? So, like, when do we start investigating the Fed?
Well, I mean, that's an act of Congress, so
Never.
Yeah, exactly. I think just on principle, the Fed's a bad idea, but we've had it for over 100 years now.
Yeah. Do you believe in that conspiracy theory that some of the people that opposed the Fed was on the Titanic?
I hadn't heard that until you told me about it, so that's still something I'm wanting to look into. So
You need to read more. I think you read 20 hours a day. You need to read more. I think you mentioned to me last week that when we get that Bloomberg terminal in here, that you're actually going to put a cot in your office.
Well, thankfully, that's not going to be required because I'll be able to have it on my phone. So, but if that was not the case, then yes, I would be moving into the office so that I could use that thing all the time.
That's great.
So.
I've given a lot of rhetoric, probably the most I've ever given on a podcast today. I had just enough whiskey. That's what the problem you run into when you go out with clients. But I don't want this to come across as a negative conversation of saying how I think the world's wrong. I think I'm more pessimistic than I was optimistic, but I always want to resort back to, I think, American ingenuity. Thank you. Right? Is the incredible. It's incredible. We're going to figure out a way out of this, right? And so, that's where I think other countries won't. I think that's the problem. I think that's where we'll always be the country that comes out on top, right?
I think so.
And then I start reading the Bible and I get really scared.
Well, you shouldn't do that.
Yeah, because the Bible says the exact opposite, that the Western does not come out on top. But hopefully that's a long way off. But
I mean, the Bible was written thousands of years ago, so you can't take it too literal in terms of our current context. Revelation is like very symbolic.
It's very
probably
symbolic.
not referring to anything specific in terms of what's going to happen in history. I think it's probably more of a pattern that you're going to observe more than like this one specific event. But that's a separate conversation. We were talking about the future of America. The future of America, we have been focusing on the negatives. I think long term, it's very bright. Our regulatory situation is such that we attract most of the world's talent. We're still a very free country. Still have the best military. China's becoming more competitive in that area. So, we can't just rest on our laurels. We have to keep fighting every day to be better. Geographically, we have great advantages. Oceans on either side. Canada between us and Russia. So we've got the most navigable waterways within the U.S. than any other country. So that makes transportation pretty cheap, especially if we utilize it more. Lots of great agricultural land. So, those are the base level fundamentals. And then, like I said, attracting top talent. I think this new space race that I'm hoping they're launching with, Trump in his inauguration speech was talking about going to Mars. I think that's a great goal. I think that's probably a little over optimistic in what can be achieved in 4 years, but we'll see.
Did you see Warren Buffett said he could fix the deficit inside of 24 hours? Did you see what his argument was?
What was his argument?
If you miss your budget by 3%, you're automatically not allowed to rerun.
Oh, yeah. That would do it.
That would do it in a heartbeat, right?
Yeah.
Like, you actually have to run a business, and the government is a business. You have to run a business, and you have to be like every publicly traded company. It's funny how we can, as a publicly traded company that you invest in, that we can account for every single dollar, and that we can run class action lawsuits if they misrepresent anything that is in a publicly traded company. If it's the government, oh, fuck no, we can't do that. No, hell no. We can't sue the government on them misappropriating our funds. We can't sue the government on actually not being stewards of our revenue. This is absurd to what we are doing at this level, right? Especially with the technology we have. And so my ploy is to Elon Musk. Come on to my show, Elon Musk, on Pursuing Alpha. I don't make a freaking dime. In fact, Ryan, we have not made one dime off this show, right? No, not one dime. So you can come on here. I'm not going to make $1 off it. Elon, come on here. Tell me that you're going to create a blockchain platform for the Department of Government Efficiencies that actually accounts for every fucking dollar that our taxpayer puts out, and that we can actually track it.
Going back to the environmental conversation, there's a book that you should read called The Moral Case for Oil. And I don't remember who it's by, but he cited one of the original environmental scientists back in the 1970s. And in one of that person's public statements, they were basically encouraging scientists to overstate the climate change issue in their research.
Yeah, that's been well documented, right?
So
because have you seen what they did in Africa?
They've done a lot of things.
Have you seen what they did with the half moon? Like less than $10,000 to redo some of the Sahara Desert. Isn't it Sahara Desert?
Oh, desert reclamation?
Yes.
Okay. I've heard about that going on. I didn't know it was a crescent
to watch. It's so they employed these people that don't have a job, so they give them a job. And they create these crescent half moon, dug them out, put berms on the backside of this. Great documentary on this. And then when it does rain there, that rain collects in those crescents and it fills up 2 to 4 feet deep. And then it actually soaks into and within like one season, they have green pastures and and literally going back 50, 100 years, and it recovered, lost erosion inside of the desert, and now they're expanding this, expanding. That's the shit that I love.
Yeah. I love
that innovation
agriculture and that innovation. Yeah.
It's
Reclaiming
crazy.
deserts is pretty interesting. That is not something I heard about, though. So
You need to watch the documentary on that. And it is, what I loved about it is it gave people that were just literally desolate, and they were running out, and they were living in a desert, and they were running out of food, and it gave them just a little bit of hope. They could not only were they paid to go out and create something that they could physically see for such a cost-effective way to do it, to build this, and they did it in 10, 20, 50, 100 acres, and it just made a massive impact. And so those are the cool things I look at. And I look at like things like Mr. Beast. Did you see like Mr. Beast spent like, what was it? Can you look it up, Ryan, for me?
I don't follow celebrities.
Yeah, I follow Mr. Beast. I don't watch his videos, but I follow him. How many wells did Mr. Beast, at what cost did he drill in Africa? This was unprecedented. His own money, and he drilled hundreds of wells. I mean, he literally drilled.
I built it 100 wells. I don't know if
It's 100 wells.
disclosed how much.
I think it was like less than a couple $1 million
Really?
in Africa. And he gave all these communities free water, went and drilled them, filmed it, made $10 million off of it, and gave all this free to them. And everybody in the mass media just went after him because he wasn't black and he wasn't a nonprofit. What is it? NGO that went and did it, and he did it on his own. And I love to watch some of the clips on him saying like, I got more pushback in the entire globe off of that than anything I've ever done.
Wow.
And he gave 100 wells to 100 communities for free. All he did was film it. And because he did that, and he showed the inefficiencies of all the corruption that we go into these NGOs on, that's the shit we should stop. There should not be any NGOs in the world. It should, and maybe I'm wrong. If you're NGO, come on here and tell me I'm wrong.
It's a moral issue. It's a cultural problem. I mean,
but when you
can
tie those
change the
two
structures,
things
you
together
can't
with
change the
finance,
people.
yeah, when you tie those two things together, like, oh, I'm bleeding heart bullshit into like, I'm trying to do good into here's money, then you get inefficiencies and you get corruption. And so when you have none of those things, I think it's really where we go. So let's end this thing on a good thing. Where do you think the economy's going to go with all your optimism in the next, and how we manage the portfolios on stagflation? That do you believe in stagflation?
Yes.
Okay, where can we make money, abstract, big picture?
So
in stagflation in the next 12 to 24 to 36 months.
So relatively short term, I do think the economy is going to face challenges. Long term, I'm very, very optimistic on the U.S. I still think we have a great future ahead of us, but that isn't to say there aren't challenges. Stagflation does seem to be the most probable outcome, and generally what does well in stagflation are inflation-resistant assets.
Like what?
So those are the base inputs to an economy because those are the people that have the most pricing power. So the economy doesn't run without energy or food. I mean, people have to eat and you have to have energy to do anything in our modern society. So those are the most inflation resistant, I would say, as well as materials, whether precious or industrial.
Like steel.
Such as steel, yeah. Because whatever you're trying to do in the economy, you have to start with base materials, unless it's a service. And then the question is, well, what services are people going to want to buy during slow or no growth in the economy? Those would also have pricing power. So that's another area that you could look. So, but going off the 1970s, generally that situation, people always point to more the commodities and energy sector for defensive plays.
And you think those are that outpace the overall tech sector?
So I think right now the tech sector has by and large outrun the next several years of growth. I mean, I wish we could pull it up here, but we've got a chart that we look at. We've got lots of charts we look at, but one is shows forward earnings estimates for this particular one is the S&P 500 and the current valuation, the current PE. And if you look, the valuation's grown by, I think last time I looked at it was about 70 or so percent over the last 3 years, whereas forward earnings estimates over that same time frame have only increased by about 40%. So that's still good growth, but the valuation is making those forward earnings estimates more expensive. And so what that's telling you is even if those optimistic growth estimates are achieved, you're having to pay a lot more for it than just in the recent past. And we are starting, I mean, 3 years ago, the market was generally already fairly overpriced. So it's just becoming even more expensive. So going back to earlier, where can you make money? It's hard to beat a buy something cheap and hold it till it's expensive strategy. So generally look for undervalued assets. And since we're expecting persistent inflation, services that are necessary in the society, they'll have pricing power, and then the inputs to that economy, such as energy and materials.
Do you think on top of that, do you think in the short term, meaning the next 6 months to 12 months, and the longer term, meaning 12 to 5 years, where do you think fixed income and debt's going to set from a treasury standpoint at a government debt to also to the commercial side and corporate debt is going to set? Is that going to be a good asset class? Knowing where do you think interest rates going to be? I have my own perspective, but I want to hear it from you.
So,
and explain why interest rates affect debt first.
Okay. So you have your principal loan, and then you have the interest payment that it offers as compensation for the lender making the loan. And if you have a debt obligation issued in year one, interest rates are at 5%. Okay, it's trading at par. And then year two, they raise interest rates and new loans are issued. Well, those new loans that are issued based on the current interest rate, which is now 6%, which is a higher compensation than the original loan issued was offering. So in order for
those two debt instruments to become
for
equivalent,
them to equalize, for them to offer equal returns, the loan that was issued prior to the increase in interest rates, in order for it to be competitive for someone who's wanting to sell it, you're going to have to sell it at a price at which it's yielding the current market interest rate.
So the bond itself goes down.
Yes, the bond value comes down so that the coupon payment you're getting off of it increases
equal to
the current
marketplace,
the current market price. Yeah.
Right. And so to put this in perspective, last 3 years, interest rates went up from 0.25% to 5.25%. They're coming down now. Mm-hmm. So we've had a 40% loss roughly in the bond market over the last 3 years. And so I think what you're getting to, Jay, and correct me on this, is that you think there's opportunity to go back to the mean, go back to neutral on what those bonds are if interest rates come down in the short term during this inflection that we have for the next 3 to 12 months, where we get into a recession and then the Fed actually has to lower rates in order to not put us in a recession, which makes these bonds reappreciate back to their is. But however, that's the short term. But however, long term, you believe?
Long term, well, in neither the short or the long term do I like long duration fixed income, because the market's forward looking and I'm not sure that there's going to be as much appetite for long duration fixed income as there has been in the past. That's my own personal view. There's plenty of people who think differently. But yeah, in the short term, I think fixed income is actually probably a pretty good place to be, just to avoid a potential correction in the market, have some dry powder and get some money on it while you wait, some interest on it. longer term,
We think innovation's going to be the catalyst to actually bring us back in this, whether it's AI, American ability to grow out of it. And then you also have to look at what are we going to do with the debt? That's the question.
Going back to that, the reason I don't like fixed income long term is because of the debt issue. And if you look, the government budget office, they release their estimates of those unfunded liabilities and when they're going to come due. So I think I was looking at this last year, so they might have updated their report since then. But they were their own estimation, which they work for the government, so you would think they're probably somewhat biased. They were saying that we expect to be out of Social Security funds by sometime early 2030s. I think they might have put 2033 as the year.
But now it's like 2027 or 2028.
Well, that's
my
own personal view, because we've had all these illegal immigrants coming into the country, and they've been using funds like Social Security, et cetera, to help keep those people afloat since they can't find work when they just get here and whatnot. So they're posting them up in hotels and giving them like food stamps and stuff so that they can stay fed. But they're using funds from somewhere for that, and I've heard a lot of people speculate that it's coming out of those Social Security and other funds. So based on the Congressional Budget Office current estimates, they think they would run out in 2033, but I'm not sure that they were accounting for feeding and housing all these illegal immigrants that we've had come over the last several years especially, but it's been a very long-term problem. And so I adjusted their expected growth rates in those assets they're using to fund those obligations. And my own personal view is if they had stopped, say today, then if they had stopped the issue and it doesn't get worse, it's still reasonable to expect that they might run out of money by 2027 or even 2026, because it's all based on their assumptions of how fast they can grow the money they're going to use to pay those obligations with.
That's the crazy part of it. So fixed income's not a place to be. Why do you own stocks though? Here's the thing it's like if you own a company, and I'll end it here because I think we're going long in the tooth. Would you rather own a debt of the government that can't repay it and that they have all these outstanding obligations, or would you rather own a stock that's independent that has free cash flow that you can back up? I know I can own this company that is producing this amount of cash flow, that has a wide moat, and that is expanding its revenue, expanding its margins, or paying its dividend, and that's expanding as well. Or do I want to own the debt of it? And so I fall in that deal. I'm very optimistic on equities. I think that we're going to have to reevaluate historical multiples on what's normal. And we're going to have to inflation adjust the normal multiple. And I think that's a very, very good exercise I'd love to do. And we've already been doing that, but I'd love to actually quantify it down into a research paper on saying, if we go back to the 1980s even and say that we inflation adjust multiples on what's normal Shiller P, like let's just say Shiller P, right? And Shiller P is the 10-year historical average on the individual security, not the base price over earnings of the overall broad market of that security. And so it gives you a more granular allocation of that individual security, because some price to earnings or PE of individual securities history over the last 10 years might be higher than, you might get an NVIDIA or a Meta or a Coca, higher than what a Coca-Cola would be, because it's a higher growth company. And so you have to take those bias on the growth rate of the company in account. And so when you look at it from a standpoint of a Shiller PE and you inflation adjust that Shiller PE, I'm curious to see if we're overvalued or undervalued. Right now, if you take it on a broad base, surface level, top line level, I would say we're 2 times overvalued what current value is historically.
Yeah, so that's another thing we track here. So the cyclically adjusted price to earnings ratio adjusts for the business cycle, and it also adjusts earnings for CPI inflation. And it's around 35, and historically it's generally not been, that's only happened, it's only been this high back in 2022. It was a little bit higher. So, but prior to that, I don't think it's ever been this high before.
It's close in 2001 in the dot-com bubble too.
I think it's higher than that. Yeah.
It's higher now, but it is. So that's the deal is, what had happened in the dot-com bubble? You know what I'm saying? And that didn't end well. You know,
No.
What did it happen in COVID and all that bubble? It didn't end well. And so it either ends with a war, or it ends with the plague, or it ends with some type of economic downturn. And so that's my point. I think it's a good place to end it well. I think the economy is going to come out of this thing looking great. I think we're going to have a great, what's the word for it? It's like initiative, but it's not initiative. It's
Innovation.
Innovation thing. I think we're going to have a great innovation in our society because America is always good at doing that. But on top of that, we need to be realistic on what valuations are today. Take some of that great gains off the table, rebalance into conservative asset classes.
So, yeah, I mean, everybody's talking about space, but something that not as many people are talking about is, as an area for growth, is deep sea mining. So that's an area that there's a lot of
All right,
resource potential.
We were fixing the end. Now we got to go into a whole nother window. What the hell is deep sea mining, Jay?
So deep sea mining is, it's just that you down at the bottom of the ocean floor, they're typically around volcanic vents or like fissures in the seafloor. There's just whether it's silver, gold, or magnesium. Even I think they found cobalt and copper. There's just big chunks of it lying around. I don't remember these volcanic vents. I think there's more of an official name.
So that's a question on the vents themselves. Probably give off energy. Can we harness that industry? But
geothermal energy.
Yeah,
That's probably something, but that's going to be a long time coming.
I know how the depths is what, man, that's a curious conversation that's out there, because if we can harness that, and it's already coming out naturally, and it's going to actually go into the, ocean, and, but if you take that out of the ocean and the ocean doesn't warm anymore because of that, could you affect the ocean's temperatures?
Yeah,
there's always cause and effect relationships inside of there, but.
Yeah, a lot of the activity that I'm aware of is specifically focused on the South Pacific and like Papua New Guinea. The very first company I invested in was called Nautilus Minerals. It's long since gone bankrupt, but they were developing ships to basically go and scrape all these, they call them nodules of precious and industrial metals off the ocean floor, suck them up onto the ship through a tube, and then process them there on the ship before going to port. So it's pretty interesting. And so yeah, we've got space, and we've got there's still that mostly unexplored deep sea that I think offer great areas of growth.
Yeah, I think space is actually easier than actually deep sea.
Yeah.
The problem with deep sea is pressure. Mm-hmm. And from everything I've seen, and there's some clips on Elon talking about this, the ocean is actually harder than space on that, some aspects of it. I'm sure they're both incredibly hard, but. So if you haven't got it, Jay is a gold bug into some aspects of
Just
it.
a little bit.
Just a little bit, right? So I appreciate you coming on, man. I really do. I enjoyed the conversation. I went on a couple of tangents here, but I think we're in a very sensitive time in our economy. But I love having these conversations. I hope you come back and we keep on, doing this over and over and over again, because it's a lot of fun for me. I get to challenge very smart people because I'm the dumbest guy in the room every single time we have those conversations.
Might be a little harder on yourself there, but yeah. Thank you for having me on. Appreciate it.
Yeah, talk to you soon.